Everyone, Double P here. Welcome. We're gonna get going because it's a beautiful day, and I don't want to hold anybody up. I've given you the ability to unmute yourself if you need to be unmuted. Just let me know if you can see my screen. Just unmute yourself and just say, yeah, you can see my screen, or just put in a one to the chat box for me, please, and then we can get going.
Is there any way to make your screen a little bit bigger? It's very small on my notebook.
I'm on an ultra wide screen right now. It's a full screen. Anybody else having that problem? They can't see my screen? Okay. All right. So we're going to get moving. Probably when you see the replay, you'll probably be able to see full screen, but I'm at full screen right now. So I'm not too sure what you're looking at, but it says here I'm at full screen. So today's coaching call, I just want to go over some support and resistance because I got a few emails. People, members, well, more so new members, they're having issues trying to map out volatility and mapping out support and resistance, where to get into a position, where to get out of a position when it comes to options. And this is same thing for stocks, any equity product, same thing for futures. Doesn't really matter. The methodology and the system is all the same. There's a couple different tools that I will show you how to map out support and resistance with volatility, because it's very important. The most basic one is the price level tool. Now, as I go through this coaching call, you do not need Thinkorswim to be able to do this. Some of probably the top 50 brokerages around the world, they all have the same packages. They all have the same indicator packages. They all have the same chart packages or similar. They all have the same drawing tools or similar. So if you don't have Thinkorswim, don't worry about it. Any of your other brokerage should be able to have it, like Tastyworks, IB, whatever other TradeStation, TradingView, all these other top 50 brokerages, they all have the same packages, similar packages. So don't let that stop you. I got a bunch of new people that came in over the last week and a half, and that's their biggest gripe is, I don't have Thinkorswim. You don't need Thinkorswim, right? Same thing with the option chain. All the top 50 brokerages out there, they all have the same option chain. They all have the same or similar features. And truth be told, some of them probably have actually a little bit better pricing than Thinkorswim, because Thinkorswim bought out by Schwab, and it's now Schwab, and they're gangsters for their pricing, and they don't really care. They're ruthless. So you might probably be able to get better pricing for options on Tastyworks, or even on internet, or even on interactive brokers. I don't know. I use Thinkorswim. I'm not leaving Thinkorswim. I'm used to it. I don't have time to deal with new brokerages, but dig down, do your research, and figure it out. Pick up the phone, call customer service, and just ask them, what do you pay per option contract? What are my commissions? Simple. All right, so let's get into, let me show you first some of the easiest tools out there. First, we'll go into the price level tool. Price level tool is just basically a horizontal price level tool to map out support and resistance. It doesn't take into consideration volatility. The next tool I will show you, which is called the rectangle tool, or the box, what I like to call it, which is what I use, it compacts volatility in it as well, so you get a nice little range. With support and resistance, you basically have to map out levels. And there's another tool I'll show you, which is also Fibonacci Extensions and Fibonacci retracements. Fibonacci retracements is more of a mid to long term level tool. So i.e. a month, 3 months, 6 months. The extensions are a little bit shorter. So the Fibonacci extensions could be for intraday trading and weekly trading. So there's a couple different variations to them that you should be able to use. So let's just go over the support, the price action tool first. So if you're trying to figure out, well, how do I map out support and resistance using a price level tool? Well, I'm going to show you the quote unquote unpolitically correct dummies version of how to do it. So how I map out support and resistance levels is I just basically look at what's going on. So if you look over here, you look at this section right here, this is to be consolidation because the candles are, and I'm on a 5-day, 1 hour chart. So I like to do my 5-day chart, a 5-day, 3-day, then intraday, and then I'll map out a weekly. But for now, I keep it short and simple because when I do on the hour chart, you'll see more volatility and it'll make more sense to you. You can map out support and resistance however you want, whatever floats your boat, whatever makes sense for you. I'm showing you what my mentor taught me and what I'm using that's been very successful for me. If you don't like it, you don't have to use it. You can figure out what works for you, what works for your trading, and implement. So whatever I tell you right now, take the best of what I tell you, implement it with the best of what works for you. Everything else, throw it out. You don't have to compress or you don't have to frame everything I'm telling you to do into your own trading style. The objective for me is to get you to be a optimum profitable trader so you can go off and go hunt for yourself. That's my objective, and to get your case study and your testimonial, right? So with the price level tool, I look at this as, okay, well, this was the consolidation area. So I go at the bottom of this candle. This is basically support right here. So I click on support. Once again, if you want to go into the drawing tools, you can do whatever you want. So if you're asking me, well, how do you do these dashes and this and that? Well, here it is right here. All right, I put on the left extension, so it goes all the way across the screen. Right extensions all the way across the screen. I show the price on the left. You can put it on the right. Doesn't matter. You can turn it on. You can turn it off. You can show it or not show it. Totally up to you. Go down to style right here. You can do whatever style you want. You can go down to width, whatever width you want. Make it skinny, make it thick. Totally your call. Whatever you want to do. That's just semantics. Don't worry about that. So 162 right here, I look at that as a support level. Whereas another support level and price action level, well, right here. See this top right here, top right here, top right here, and basically top right here. That's resistance for that time period, support and resistance, right? Whereas another support level, well, here's the bottom, right? That's the absolute low for the week. Right, and where else is there a low? Touch down here, so I tagged it twice. So right here, I put my cursor over it. I tap that out right there, right? Where is there another high? Where is another reactionary high? Well, right here, I tapped it once, twice, 3 times over here, broke through. So that's another level right there. And then where's the high? The high is right here. So I tap it right there. So a high once, almost twice, 3 times. So that's a high, that's resistance, right? Super simple. And right in here, all this area here is just gap, right? This is range, right? And this is range, right? All this, so this big space right here, that's a range for you guys to look at. Say, do I want to actually trade in that range? Maybe not, because you're just going to get bounced back and forth within that range, right? So that was 3 days, Wednesday, Thursday, Friday. So Friday, Thursday, Wednesday, in this choppy range right here, nothing happened, right? Where was the action? Well, the action stopped right here. Then it came down here, and this was now chop. This was Chop City. I mean, it's still $4, but it's $4 a Chop City. So I mean, depending on how you want to play it, that's why I go intra level. So you start looking at pockets that you can trade. You can trade $1 or $2, get in there, get a good, either a good call or a good put situation in a $2 window. You can make some money, right? Depending on how many contracts you get, right? In this area here, this is consolidation, right? In this range. So that support and resistance on the price level Very simple. You just map out your pockets, right? And you have the price. So if you're looking to do a call, if you're looking to buy a call, or if you're looking to sell a put in this area right here, 158.86 to 162.59, and it's not precise. I'm not going down to the penny. What I'm doing here is I'm getting a good average range of what the stock can do within a certain time frame. I mean, could I hone it down to within a penny? Yeah, I'm not going to hone it down within the penny. I'll usually do it within about 5 or 10 cents, plus or minus, on the top and the bottom. So the top of resistance, bottom of support. That's all I really need. You don't need to get precise down to the penny. Okay, especially when you're doing intraday trading, plus or minus 5, 10 cents is not going to make or break you. So you look at this and you say, okay, here's support, here's resistance. So here, if I look at this and I tag, so let's start from a Tuesday, right? What did NVIDIA do Monday, Tuesday, right? It chopped around in this area right here. It broke out, as you can see right here. So let me get the pencil so you see this. So right here, it broke out, hit a high 170, right? And then from down here, this is put action, right? This is right here is an engulfing bearish candle right here. So what happens now is it broke down. You see the stair stepping to the downside, or ski slope to the downside, however you want to say it, in that area right there. So it broke out. This is a big Maribosa candle right here. This is a bullish candle, because you can see right here, this is consolidation, but here is an inverted hammer where this is a bullish reversal, and then boom, you get this big Maribosa candle right here, and then you top out, right? Hit a high, and then from here, it's stair step down. So this is a good area to do put action or a put city if you wanted to sell, or sorry, if you wanted to buy a put and sell it all the way down, right? Write it all the way down. That would have been a great trade for you. Then what happens here from Tuesday to Wednesday? Well, this gap down, right? You see the gap right here. You see the huge amount of space from this closing candle right here, right to the opening candle, a gap down, right? And then this is a bullish hammer right here where you see, once again, it took right off. So it stair stepped up, right? This is the Hangman candle right here. This is the spinning top candle right here. This is a almost a spinning top slash doji right here. So this is the candle of indecision, because when this bull candle pushed the stock up, you got a nice little thick pull right here, and then this is the candle of indecision, like a doji. It's just spinning, didn't know what to do. Then this spinning top closed, and then you have this right here, this hangman candle, which means a hangman candle basically is hanging out in the middle of nowhere, but it's at the top of the range here, because this is resistance, and it's got a long wick right here, so it's gonna be bullish. And this is what happens right here, right, with these next two candles right here, and then it hits that resistance level again. So this resistance was this support when it was coming down on the downside, right? So that's now support, right? Sorry, that's resistance, right? All the way through. So when you're looking to do your trades, you have to look at what's going on the previous day to be able to map out your next day, your ranges, right? And this is what I do when I map out my ranges. So this is support and resistance on the price level. Now, like I said, there's no volatility in the price level tool. It's just a basic price action. And price action can always lie to you, right? So you need to be able to look at volatility along with the price action tool to be able to look at, okay, where is the real true range of NVIDIA throughout this last week? What can I actually do to map out how volatile this actual stock is? Well, you go to the next tool, which is what I use, which is the rectangle tool. So before I go into that, if you've got any questions, before I go into the next support and resistance type of a tool, do you have any questions, or are there any questions? You can unmute yourself and you can ask me about the support and resistance using the price level tool. So if you got any questions, you can unmute yourself and you can let me know. If not, I'll move on to the rectangle tool so that you can see volatility.
Peter, can
Yes,
you hear me?
sir.
So the purpose of mapping out these levels is so when you're taking your trade in the next day, you have an idea of like how the stock can move. Is that fair? Is that accurate to say?
Yes. So when I always map out my support and resistance using the price level tool, it gives me my entry point and my exit point. So it gives me a good guideline to where to do my entry trade and what particular option I can pick. And then also where is going to be my exit. So i.e. my profit taking or half of my profit taking level. So when you're always looking at a support and resistance using the price action tool, you always want to map it out so that you look at for entry points for your entry and your exit position, right? So excellent question. So right here in this particular level right here, where you see the range and it was all choppy, entry point 162.59. Now, if you didn't want to get up to 166, you could easily take this right down here. So look at this candle right here, the close right there. Look at how draw your price level tool right here. And then you could say to yourself, okay, 162.59 is right here. Where was this price action? 164.67. That's a what? $2 and something cents profit. So I could say to myself, instead of waiting to get up to 166, I could start taking my profit around 164.67. Right. So when I'm looking at doing my strike, I could be looking at doing a 160 strike call and then getting out around 164, waiting for it to get to 164. Because if you look right here, so that level right there, how many times did it pass through that level? How many times did NVIDIA price through that level, right, throughout the rest of the week? So that could have been a good position for you to either do a quick call or a short call, or you could have been bullish and you could have did a debit spread. So you could have did a debit vertical. So you could be buying the 160 call and selling the 164, right? So you could be doing like a debit spread, a debit call spread, right? So you would have made a lot of money there doing a call spread. So that's why you can use the price level tool to give you entry and exit positions. Any other questions for the price action tool? Okay, so what I'm going to do is I'm going to go over to the next tool. So I'm going to clear this drawing set out. So the next tool I'm going to show you guys and girls is the rectangle tool. This is what I use all the time. This is what's going to be in version 3.0. This is called the box. So this helps me to map out and know exactly where the stock is going to open up, when it's going to open up, whether it opens up above the box, below the box, or inside of the box. It shows me volatility and it helps me map out exactly how to position my trade. This is the next level or the second level for the tool, right? So on the box, what the box is simply, once again, we use it from here. We open up the box, we close it down here. We don't put this in here because I don't count this. This is what I count. Let me map it out first and I'll show you exactly what I'm talking about. So with the, let me just get rid of that. Let me put this on here. So with the rectangle box, this lets you now see volatility, how volatile this actual NVIDIA is, and it also gives you a time and price that's included with it as well. So you know exactly where the start and the finish is. If you put your mouse over it, it'll actually show you the date, the time, show you the volatility, and show you the length of how long this actual the price action was sitting inside this particular range. So that's the volatility tool. You want to see the volatility tool, you come over here, sorry, the drawings, you come down here, and it's right there as that box. It's called a rectangle tool. It includes volatility for you. So when you're looking at NVIDIA, when I'm looking at NVIDIA now, I look at it and say to myself, okay, once again, here's a better look at volatility. So if you're wondering, how did I get it all, the volatility mapped out in yellow? Simple. I went down, I opened up the properties, and I come down here and I put in my color. You can put the color box however you want, right? This helps me see volatility in a nutshell when it comes to NVIDIA and time of that volatility of where it's expanding. So I know exactly when to go in and out of my trades. Now, when I send you guys trades, again, every email that I send out to you guys, I always tell you my emails are templated, so I don't have to keep writing the same email and waste a lot of time. My emails are templated, but I tell you, you are never out of the trade until you stop trading that trade, or until you stop yourself out and you don't want to no longer be in that trade. When I send out a trade alert to you guys, I'm in that trade most times 2 to 3 times throughout the course of the day. So if I get stopped out on the first try, I don't shit my pants, or I don't get freaked out, and I don't worry about it. I don't get emotional. I say, okay, that trade didn't work, or I got stopped out early, no problem. I'm going to wait again and see where my next entry point is going to be. How do I do it? I just showing you, and I'm showing you. I map everything out using my horizontal price action tool. And then I use the box tool, because the box tool shows me volatility with time and price all compressed into one. So those are the tools that I use. And then the next tool I'm going to show you is the extensions and the Fibonacci extensions and the Fibonacci retracements. But we're going to stick with the volatility tool, which is the rectangle box, right? So if I get stopped out in this particular trade, I say, no problem. I look, where else can I get into this trade, right? I look at, I map out volatility intraday. So I wait for my opportunities to get back in, right? Using the price action tool and using the rectangle box. So as you can see right here, there's ample opportunity to get back into a trade from 4 a.m. to 10:26. There's ample opportunity here to get back into a trade, right? This was on what? On Wednesday, right? So look at what happened. So look at what happened here on Wednesday, and look where the stock opened up, and look what it did, right? From here to here was an explosion. You can see it right here. There was an explosion at the opening of the bell till 10 o'clock. Perfect time for you to get into this trade, because that was the top right there. Get in and get out. When we do our trades intraday, I tell you, right? I'm not staying in a trade all day unless the trend is moving in the direction that I want it to move. If it's not, I'm getting in and I'm getting out, and then I'll wait again and I'll watch to be able to look and see when is another point for me to get into that trade. Well, from here, from 9 till 10, that was my first opportunity. Then it took a bearish position, because you see this big engulfing candle right here. It went down. And then look, you got 3 soldiers right here, or 3, you got a big bull box candle right here with a big spinning top. And then you got an inverted hammer, right? But this inverted hammer here failed because it turned bearish. But in this particular point, from 12 o'clock up to 2 o'clock, that would have been an amazing trade, a 2-hour trade where you just rode that candle up from, what was that price point? From 161 all the way up to 166, right? So, I mean, that was a $5 move. That was an incredible move if you would have bought some options, right? And that's all intraday, right? You see it right here. I wait on this reversal right here. Then I say, okay, well, now this is bullish, right? So if I didn't get in on this candle right here at 12 o'clock from, what is that, 11:30 to, sorry, from 11:30 to 12, if I didn't get into that candle, well, there are my next two candles right here on the hourly chart. But I break it down because I trade on the 5-minute and I trade on the 2-minute and the 1-minute. So intraday, I would have looked at this. So let's come down here in 5-minute. So let me break out this time frame here. Let's do on a 5-minute. Let's go on a 5-minute candle here, 5-day, 5-minute candle. So what day is this here? Is this this is Wednesday? I believe that was a Wednesday as we're talking. It was a Thursday. So let's come back over here. So that would be the Wednesday. So let's go down to 12. So literally, so there you go, right? So let's look at this. So right there, let me move this up here so that you can see it a little bit clearer. Let me increase that. So right there, intraday, this was your bear candle right here, 5-minute, and then look at the reversal right here. So just like I said, intraday, that's where you map it out, right? So from 12 to 2, which is right around there, there would have been your beautiful trade right there, right? So using the volatility, using the box, you'd be able to sit there because you don't need to be in a trade all day, right? Especially when you're doing options, because what happens when you're working with options? You got time that is working against you, right? You have the volatility of time that is working against you. This is why when I send out the trades to you, because the market is in the condition that it's in right now, when we're in these trades, you have to map out, and this is all in the course, by the way, you have to map out your price action. You have to map out your volatility. In version 3.0, I'm introducing the box. I'm going to show you the box, but on my YouTube channel, I've been going over the box for like, I don't know, like 7 months on my YouTube channel, but I'm going to be releasing a version 3.0 literally, I think this week or next week. You're going to have it, the box. I fully explain it to you inside of the course. So you're going to have take time now. You're going to be able to look at it on an intraday basis, and you'll be able to now, if you want, totally your call. You can start to look at trading on a 5-minute candle, a 2-minute candle, a 15-minute candle. Depends on your trading style. I prefer a 5-minute and a 2-minute, and do my entries on the 1-minute candle. And then I monitor on a 2-minute and 5-minute, because with NVIDIA has so much volatility that it can move up or down $3 or $4 within a matter of 3 or 4 minutes. When it's volatile, when it's docile, i.e., when it's just kind of trading in a tight range, which is kind of what it's been doing over the last 2 weeks. They've had in and out moments, but when NVIDIA was really volatile, that thing can move. This stock can move, $15, $20 in one day, which is why I like trading it, because that's a boatload of money. If you get one trade right in one day, I mean, you're done for the month, depending on how many contracts you buy. So that's the power with NVIDIA. Now, does this work with every equity? Absolutely. Works with ETFs, works with futures, works with options, works with equities, works with stocks, doesn't matter. This is a quant driven tool. It's quant analytics. It's prefabricated. So you don't have to do anything. You don't have to figure out the science behind it. You don't have to figure out the numbers behind it. Just draw the box, and everything is set up for you. The volatility, the price action, and the time frame, right? So it's got time, it's got price action, and it's got volatility all mapped into the box. That's why it's called a rectangle. One of the best tools on the face of the planet. All the brokerages have a similar tool, whatever it's called. I don't know, right? But they all have them. All the top 50 brokerages have them. This is your life right here. This is your lifeline. You want to be a good option trader? This is what you use. Can you use the price action tool with the volatility tool? Absolutely. Of course you can, right? I do it all the time. All right, this is how I build out my levels. Right? And then I'm a little bit more precision, so I can start going in here on an intraday level and start going like this and breaking up my price levels on different candles, right? Because then that helps me be even more precise if I want to take a second or a third bigger trade, right? I look where all the clustering is. So this is clustering right here. All this is cluster. This is all consolidation, right? Inside the intraday. You don't want to get trapped in that. Although that is after hours, but it's the same thing. If you're trading stock, you don't want to be trapped in that, right? So that's the volatility. That's the rectangle tool built for you. You don't have to do anything. Just draw it out. Now it takes a little bit of practice, a little bit of know-how. Obviously, you got to know what candles are. You got to learn a little bit of candle. But I mean, literally, you can eyeball this, and I mean, without getting precision, you can eyeball it and map out. Okay, well, where's their resistance? Where's their support? Where's their consolidation? And you can draw it out, right? You don't need to be great at it. So watch. On a 5-day, let me drop this down. So let me drop this down to a 3-day so I can compress it a little bit more for you guys. And let me get rid of this candles right here. I put these candles up for myself. I don't really need them anymore, but this is a perfect way for you to actually look at candles and know exactly, look at reversals, look at bullish candles, bearish candles, and look for reversals, right? These are patterns that you need to look for. Where do you find them if you're using Thinkorswim? Well, I'll show you. In Thinkorswim, and you should always have this on. You should always have this tool on. You come over here, you look at patterns, right? You click on it. It says show patterns. Always have that check marked on. Click on select patterns. Come over here. Go to candlesticks. Click on candlesticks. And then here are all the candlesticks that make up of a chart. You want to know what they are. Click on the question mark, and Thinkorswim will load it up for you. And it'll show you exactly what it is. It'll show you bullish and it'll show you bearish, right? And just read it. Super simple. You don't have to go anywhere. You don't have to go to Google it. You don't have to do anything. Everything is inside of the Thinkorswim platform. Is it done like this on other brokerage platforms? I don't know. I'm probably sure it does, like with the interactive brokers or Tastyworks or whatever, because a lot of these other brokerages model Thinkorswim. So they're probably going to have the same stuff. If it doesn't have it, contact their customer support and say, hey, why don't you have diagrams and information for your candles? I'm sure they probably do, right? So it's just in their documentation somewhere, right? Inverted hammer. What is an inverted hammer? Well, click on it and it tells you what's a bullish and what's a bearish, right? You see bullish and you see bearish, inverted hammer. Now, inverted hammer is a bullish reversal, right? So that's that right there. So the reason why I want to come down here is a 3-day, 5-minute chart. So let me open this up here so that you guys can see it. I can map out 5 minutes. Sorry, I can map out 5 minutes of volatility intraday using the price action and using the volatility box, right? So let's come over here. As an example, let's take this day right here, right? What do you guys see? Just by looking at this chart on a 5-day, 5-minute chart, this is quite volatile. NVIDIA is very volatile. But if you look at it, you will see patterns, right? So let's do the price action tool here first. So this is the simplest tool. Let me do price for you. When you're using the price action tool, what I look for are cluster points. Let me map everything out first and I'll show you what cluster points are. Cluster points are resistance, so support and resistance. So on this particular day right here, so let's go from 9:30. So from 9:30 up until 4 o'clock, right? Let's take this box right here. So I'm going to move this just a little bit more so that you can actually kind of see it. Okay. So from 4 o'clock, sorry, from 9:30, so right from here, this is the area that we're looking at. Using the price action tool, you can see where support and resistance is. You can see where consolidation is. So if you were to look at this and try to figure out what kind of position that you could take or an entry point that you could take, you could clearly look at this and say to yourself, okay, I'm going to look for an entry point and an exit point, right? So if I was to move from 9:30, I see this reversal. This is the first reversal. This is a skinny inverted, not a hammer. This is like a down shooting star. An entry point for me would be right here. And what was this? This is probably like 9:45 or so. Let me get rid of this and let's see what that time was. Yeah, see, 9:45. Right. So from that particular point right there, that would have been my entry point. Right here, I would have went over and I would have took a 162, sorry, I would have took a 163.50 or a 164 call right here. And then from here, that would have been my trade. Watching what happens. I would have mapped everything out right here. And This is where a lot of you might get bent out of shape. Not bent out of shape, but this is where a lot of you might say, "Oh my God, if my entry point was here at a 163.50, if that was a call option, right? Well, you made the big move up here, then it reversed on you, but it didn't. It didn't go through. It didn't go through. See, it was 163.79. So you're still safe, right? You would have got back to even if you would have held your position because you understood candles, you understood volatility, you understood how to map out support and resistance, right? You would have took that trade and you would have been finished out either right around in this candle, 165, if you would have been like, hyper bullish, or you would have went and got your 20-30%, which is totally doable at the 163.50. So you'd have been out here at literally 163.95, right? So let's go over 20% here. Let's just say for craps and giggles. Now, this is not going to work here because this is a totally different strike, but so in this week here, what do we got? NVIDIA is at, let's see here. So 163, so 162, 165. So last week, that would have been 163. So let me see. Give me a quick second here. I got to figure out the math here. So 162, 165, that's 9, 1, 2, 3, 4. So this would be 1, 2, 3, 4, 5. So this would have been last week. This would have been roughly around $1.23. So getting in here at 163.50, and the call would have been what did I say it was again? It was about 123. So let's do some math here. $1.23 plus 30% profit, 159. So up here, so getting in this candle here, what price is that? 165, 164. So yeah, if you were like bullish, you would have got out here. You would have got out a little bit early, like very early, but you would have got your 30%. And then you would have come up if you were like super bullish and stayed in the trade. And I'm going to show you how to stay in the trade, because you guys know that I trade on. So let me put a moving average up here so that you guys can see. I use the 20 and I use the 200 moving average. Right, this is a support and resistance, but adding on the moving averages. Oops, let me fix this. So looking at this chart right now from 9:30 right here, you would have seen, here's your moving average. If the stock, for the most part, is above this moving average, you stay in the trade. And the closer that it hugs the moving average, you stay in the trade. Did it violate it here? Yes. It went through the moving average, but it didn't go down past your point of going into a 163.50 call position or strike position, right? So you stay in that trade because it's hugging it very closely. And I'm using a Hull moving average, which is the fastest moving average there could possibly be. Had I used a simple moving average, this would have been smoothed out a little bit more. So you'd be able to stay in the side of this trade, right? When do you actually get out? Right here. On this candle right here, this is the signifying the beginning of the end of the trade, where the trade is going to break down. This is a big, massive Mariposa candle. This is a big reversal bullish candle. It got bullish right here. It topped out here at 166.59. It's a sell candle right here, and this is the big Mariposa candle right here. This is a vicious sell side activity candle. You can see it right there where the stock went, right? From what was it? From 166 all the way down to 164. That's a huge drop, right? You would have got crushed, right? Staying in that trade, but you would have got out right around, well, before here. I usually like to get out on the high. So this is where I would have got out, because I knew once they hit the high, because of the volatility, the way NVIDIA is moving, is going to be downhill, right? And then that's exactly what happened, right? You see this big movement right here. It's under the 20 and the 200, right? That's the change for the reversal. This is green. It's all bullish. So you stay in the trade. When it reverses, you see the color reversal right there? That's the reversal. That's when you get out, right? Or you could have took the next side of the trade, which is buying a put. You could do that too, right? I could have sold a put here, right? Rather than buying a call, I could have sold a put. Same thing, right? But I like to buy the volatility rather than selling the volatility, because it takes a lot more premium out of your account when you're selling the volatility. So you're being a premium seller. There's a lot more margin requirement. So I look at the volatility in the option chain and I say to myself, this is a little bit more advanced, but I look at the volatility and I like to buy that volatility. There's certain times where you actually do want to buy that volatility, because that volatility is going to expand. So when that volatility expands and you're a buyer of volatility, when it's a very volatile market, your option will move quicker. So if you're a buyer of calls, your options are going to explode in value, right? So I get into that inside of the course in version 3.0 when I talk about implied volatility. But for now, looking at the moving averages, and you can color code this however you want. Same thing, go inside of properties. If you're wondering how I do it, you right click on it, you go in that side in here and properties, and you color code whatever makes sense for you. That's how you do it. You don't got to copy me. You can figure it out for yourself, what makes sense for you. So you're looking at, this is bullish, this is bullish, this is bearish, this is bearish, this is bullish, right? I color code it so it's stupid simple for myself. So I look at the moving average, I look at the price, I look at the price action. So I look at the price action tool. I look at mapping out volatility in the volatility box. That's how I do my trades. I just don't take one trade a day. If I'm looking at focusing on the video, you guys might ask, why am I focusing on the video so much over the last whatever month or 2 months? Because tech is getting hammered and it's volatility. And I'm looking for big burst of movements. I'm not looking for this. Like, I'm not looking to go and trade. I'm a volatility guy. So I'm not looking to trade something like Coca-Cola. It's kind of just sits there. Like it moves $1 like in 5 days. Why would I want to do? I'm not 90 years old. All right. I'm looking for volatility. I'm looking for immediate resolution. I'm looking for big burst movements. I'm looking to make as much money. I'm looking to make as much money as I possibly can in the shortest time frame possible. There are guys out there who'll take a whole year to make as much money as I can make in a week or a month. So why would I want to sit there why would I want to be in a position for 6 months to a year when I can pack that volatility and get that same movement within 5 days or 4 days or even a day? That makes more sense to me. The more time I put my capital at risk out in the marketplace, is the bigger my risk is. Think about it this way. What could happen in a 6 month to a year time frame from now? What could happen? All sorts of stuff could happen. You could be down. There are hedge funds out there. There are institutional prop firms out there. There are proprietary trading firms out there that are down 30, 40%. And they're got hundreds of millions of dollars at risk, and they're down 20, 30, 40%, right? Year to date, we're what, 6 months into the year, and they're down. Why would I want to risk that when I can go in there and I can take a trade within 5-10 minutes or an hour, and I can do it 3 to 4 times a day? I can do it throughout the course of the week, every day, be in and out, and I can make 6 figures in a week when it takes these guys who are losing 8 figures in 6 months or 9 or 3 months. I don't want to do that, right? When the market settles down a little bit more and it's more predictable, and I want to do investment, I will do investment. I'm not doing investment right now, and you shouldn't either. I.e., I say, this is my disclaimer. I can't give you any financial advice, right? You do what you want to do with your money because it's your capital. But I'm telling you right now, if you're trying to dollar cost average down and you're trying to buy the dip, the stock is just going to keep dipping, and you're just going to be losing money hand over fist. It's a stupid strategy. It's one of the worst strategies that I've ever seen in my life or people talk about. So that's just my 2 cents worth. So that's why I trade high volatility stocks, right? High volatility stocks are going to put the most money in your pocket in the least bit of time frame once you understand how to trade them. Is there volatility? Yes. Volatility is your best friend. It's not your worst nightmare. Understand how to tame volatility, how to work with volatility, how to map volatility out using the price level tool for price action. But don't worry about price action because price action lies all the time. Use the rectangle box because the rectangle box has price, time, and volatility packed into it. So you can see all 3 dimensions so you can get a better feeling for your trade. You can drop down intraday trade. And the next thing I'm going to show you, if you're dead set against, well, I don't know if I want to work with all of this, I'm going to show you 2 indicators right now that you can put into your indicating suite, 2 study sets that don't lie. Money doesn't lie. Money flow doesn't lie. So here's money flow. And I'm going to explain what each of them are. And here's volume. Volume flow indicator. I'll explain because this is all I use because these don't lie. Money flow is a notional transaction. It shows you the transaction, what type of money is going into the stock. As you can see right here, this is billions. So NVIDIA is large cap, right? It's NASDAQ top 100, right? This is billions of dollars flowing in or out of this stock, right? This is what the institutions and the big boys and the prop firms and the proprietary traders, this is what they use. The volume flow indicator works on shares, works on notional value of shares. So it's the amount of shares that are moving in or out of a position, right? So when you're looking at this, so let me drop down to 6 month. Let me do a 6 month, 1 day chart. This will show you, and this is what's called divergences, bullish divergences and bearish divergences. This will show you when you're trying to figure out what's going on with price action lies all the time, right? You're going to see here when you're using a money flow, you're going to see here, money is flowing out of a stock right here. This is a prime example. Money is flowing out of a position, right? This is price action right here, right? Money's flowing in, money capped out right here. Money starts draining away. Institutions are selling this stock. Institutions are moving away. Here's the volume right here. Shares. Institutions are getting out, selling, and they're selling to retail. Retail's trying to get in here and buy all this stuff. Meanwhile, this is institutional getting out. while retail is trying to get in, right? So look at money flow, look at volume indicator, and you're going to see why some right here, prime example, right? This is retail trying to get in. Well, where's the money flow? Money flow is under the zero line. Institutions are selling, they're getting out, right? Retail is in here and they're trying to buy. Where's the volume? Volume is leaving as well, right? Look at this volume. You can see it right on the chart. The shares, they're dumping shares. Institutions are dumping shares. Money, notional value is leaving. NVIDIA, billions of dollars they've lost, right? Why do you have all these green candles? This is retail trying to get in, trying to buy, right? Retail's stupid, right? They don't know, they don't look, right? You guys now know, and you guys now know what to look for. Money flow never lies. This is billions of dollars leaving or going into a stock. Volume flow never lies. Volume, this is shares leaving or going into a position, right? Use those weapons at your disposal to be able to look, and you can use this on intraday as well. And it'll tell you exactly what's going on, right? Don't be retail. Don't be dumb. Let me rephrase that. Don't be dumb retail. Look at where the big money is. Look at what the smart money is doing. Follow the smart money. Look at what institutions are doing. Look at what prop firms are doing. Look at what hedge funds are doing. Look at what family offices are doing. You'll see it right here, what they're doing. That's it. Are there other ones? Yeah, there's other ones called CCI. There's CCI index. There's the intraday momentum index. Same thing. They track money flow, right? They track volume and they track money flow, right? You want to have something else included here? This is what else? This is also what the institutions use. It's called volume profile. I talked about this. This is inside of the course. I showed this to you inside of the course. Volume profile. This is again what I use. I use this tool too. Why would I handicap myself and be a stupid retail trader when I can be I can trade like I can look at what the institutions are using and follow what the institutions are using, right? And capitalize on it, right? Quick little thing on volume control. This is called the point of control, right? Inside of here, you can see this is where the liquidity is. This is the point of control. This is where institutions buy. This is where hedge funds buy. This is where family offices buy. It's called the point of control because this is the best bang for their buck. If they can get it in here, this is the discount for them, right? They'll like to get it, right? This is the lower band of the volatility profile. Right here, this is where you look at, you can look at either taking a short position or looking at taking a bullish position, but then you have to understand something that NVIDIA has to fight through all of this overhead supply right here, right? So this is why the bulk of the action sits right here and it trades like that. Up here, this is the top end of the volume profile, right? For NVIDIA to bust through all of this, this is overhead supply. These are dummies, or excuse my being unpolitically correct. This is where all retail bought up here and they're trying to get out, right? This is all overhead supply. NVIDIA has to bust through all of this to be able to spring free and be able to make major moves. This is all overhead hanging supply. Nobody wants to buy that, right? It's all retail. They bought at the top right over here, right? That's when retail bought, when NVIDIA was on its, they don't want to buy down here where there's a discount or buy at the point of control, right? If you're an investor, I'm talking about, right? Where you're getting a discount, they want to chase and buy up here, right? Now they're stuck. You can clearly see it right here. This is overhead supply, right? There's no demand. So that's what I use, tools at my disposal. Let me get back to the lesson at hand because the lesson at hand is support and resistance. But I just want to throw that in there in case you guys are wondering, well, how else can I measure this? This is how you measure it. This doesn't lie. Volume profile doesn't lie. Money flow doesn't lie. None of those tools lie. Price action lies all the time. All right, so let me get rid of that. Yeah, let me clear this chart up here. Sorry. And let's go back to where we were. All right. What's the next tool? Fibonacci retracements. So Fibonacci retracements, really good for you for mapping out your options as well. So let's look at this Fibonacci. Oh, let me pause for a second. You guys got any questions as far as what I've talked about so far? If you got any questions, definitely go ahead, ask away. I should have taken a pause right here. Go ahead, unmute yourself if you got a question.
Hey, Peter. My question was based on the other chart, so I don't know if it'll make sense now, but like when you're getting into a trade, like that NVIDIA trade you showed earlier, it was a bullish trade. Like maybe this isn't the right question for the current lesson, but how are you making a determination that if it's like 9:30 or 9:40 in the morning, that that trade is going to be bullish rather than bearish? Like, what are you looking at to make a determination that the stock price is going to be moving up?
Yeah, so I draw out the box in pre-market. So at the end of the day, I look at the last hour of trading. I draw out the high and the low and the close of the last hour of the trading day. And that gives me my box to open up the next morning. So I'll draw it out in price. So let me do it this way. So this will help you out quite a bit. Let me go down to a let me go down to a 2-day 5-minute chart. Actually, let me do 3-day. So this will help you out. This will help you out immensely. Let me just move these candles around here. Friday. Okay. So let me show you the price action. So on Friday, or sorry, Thursday, I look at the high, and let me put in the moving average here because this is how I really do it. And I'll put in the simple moving average, so it keeps it simple for you guys. This is part of the this is part of the box. So I use the 20 and I use the 200 as part of the box. So what I'll do is the last hour, I will look at where's the high, where's the low, where's the close. Now, the 200 could be the high or the 200 could be the low. So I want to look for whatever the high is and whatever the low is and whatever the close is from 3 o'clock onwards, because 3 o'clock onwards, that's kind of pretty much when all the institutions and hedge funds and prop firms and all that kind of stuff, they kind of look at either getting out of positions, getting into positions, taking positions for the next day. So I look at this and I say from 3 o'clock onwards, 4 o'clock, where was the high? So the high literally was right around here. So that's the price. So I use the price level tool. Where is the low? So from 3 o'clock, where would the low be? So it could be either the 200 or it could be the candle. So I'm going to take the 200. So right around here, that was the low. When's the close? What was the price of the close? So the price of the close give me a second here. I gotta put on my data box because it's easier for me to do that. So I can get this done properly. So the close is 162.24. So 162, and I can always adjust this. So here's the high of the last hour. Here's the low. And then here's the close. So I come over here to the drawing tool. And I draw out so I come over here and I draw out my right there. Oop. Wait a second, I gotta fix that. So when I open up and use my drawing tool, I look at this now and I say, where's NVIDIA gonna open up? You see where NVIDIA opened up? So it opens up above the box and it tells me that this is going to be a bullish day for NVIDIA. That's how I map out and look at taking my position. Does that make sense?
It does. So because it opened up above the box there, your general sense is that it's probably going to be a bullish move.
Yeah, and this has been like about 90. This is I've been mapping this out for literally the last, I don't know now, October, since last October, because my mentor showed me this particular strategy because the volatility, price action, time compression, all that kind of stuff. So this has been about literally about 92, 93% accurate. It doesn't happen all the time, but literally, and especially during all this last year when it's been super volatile, this is the Bible for me. If it opens up, so here's a couple caveats to this. When the stock opens up, if it opens up just above the box, it's going to be 9 times out of 10, it's going to be a bullish trend. But if it opens up way above the box, like super high above the box, like a standard deviation above the box, it's going to run, but it's going to come crashing right back down. It always comes back down and hits this box or starts trading inside of this box. So you have to be really careful about how you actually trade it. If the stock opens up inside of this box, this is the volatility, this is the range, this is the type of a trade. I'm a directional momentum trader, so I look for direction. So if it opens up inside of this box, I don't take the trade because it's going to be one of those days where you're bouncing back and forth inside of a range and you can get crushed because you can get some wild swings inside of a range and never get out of it. So this is called like the death zone. I don't trade in that box. If the stock opens up under the box, slightly under the box, all this right here, you can see it. then it's going to be a short position. It's going to be a day where I buy puts because it's going down. All right. But if it opens up way under the box, then the same thing. It's going to fight to get back up to the box. So it's going to be like a reversal day. So something like that, you kind of don't want to take that trade because you could get trapped. You don't want to buy, you don't want to short inside of a hole, right? This is the low, right? And you don't want to take a short position because you could get caught in the reversal and it fights to try to get back up into the box. And if it breaks, this is resistance now. This is the cloud of volatility and cloud of resistance. So then if you take it and you try to short into a hole, what will happen is if it reverses on you, then it's going to move up. And if it gets momentum, then it breaks into this box right here. It starts trading in there. But if it breaks out, then that's that breakout. Then you just got screwed, right? So you have to watch where the stock opens up. And that's why I always draw out the box each and every day, because it gives me a really good handle of whether I'm going to go long, whether I'm going to go short, or whether it's like a defined trade. If you wanted to do like a spread. So once again, you could sell a call spread. You could, if you're slightly bullish, you could do a debit vertical. You could do a put spread too if you wanted, but I kind of want to stay away from that. Those are risk mitigated trades. I do them occasionally, but I'm more directional. So I want immediate resolution. I want to be able to get in and then get out. I don't want to stay in position all day long. Like doing verticals is like trend trading, or sorry, it's like swing trading. You want to be in a position and stay in there for like a day or 2 days. And in this volatile market, you don't want to put your capital at risk for a day or 2 days, because the volatility, I mean, Powell could, in the morning could be great, and all of a sudden 1 o'clock, there could be a Fed announcement. Powell says, "Oh, the world's going to a hell in a handbasket." The next thing you know, you're down 50 points. You're finished. So that's why I don't like doing. I don't want to do swing trading or trend trading. I'm a momentum scalper, so I'm in and I'm out. My capital is at risk for a matter of minutes, maybe 45 minutes if I'm going through the trend. So that's how I do it. That's the box right there. It gives me a great definitive opening, closing, bearish, bullish, trading neutral type of strategy. Depends what I want to do. Right. So that's how you lay out the box. That's what you do. You take the last hour of the trading day and you map out you put the 20. So you put the 20 and the 200. Those are your components. You map out the last high of the last hour, the last low, whether it's the 200 or whether it's the candle. You map out the close and then you draw the box. And in the pre-market, you don't have to draw the box now. You can just map out the horizontal price tool and put all the extensions on so that when you wake up in the morning, it's already there for you. So around pre-market time, you can just simply draw the box, right? So it's super simple for yourself. That's what I do.
Perfect. Thank you.
You're welcome. Okay, so, oh yeah, Fibonacci extensions. So let me come over here, and this is the last one. Let me get rid of that. Let me go with Fibonacci extensions, retracements first. So where are we here? We are on a 3-day, 5-minute candle. Let me break this down. Let me come over here to 3-day. Let me do a 5-day, sorry. So let's do the week. Oh, that's not good for a candle spread. Let me do 3-day. That's kind of ugly. Let me see if those will serve the purpose. And that won't serve the purpose. Let me come down here to, yeah, that's a little bit better. That gives me more time. Okay. Because the extensions, you can do them on intraday, but because it's on the weekend, it makes it a little bit more trickier. So let me just break it down to a 10-day, and this is kind of actually better. So you can see exactly what's going on with NVIDIA, right? For the last 10 days. So if I was to do the extensions, I mean, I can do anything. I can do the extensions from any particular level, but I'll do it from the reactionary low to the reactionary high. Actually, no, I'm not going to do that. I'm going to do it from this high right here. Let me look at the trend here. Yeah, because NVIDIA is in a kind of a bullish trend. So let me do, this is actually better. Okay, so let me tighten this up. This actually works better. Okay, so when you're looking at this chart, and you can draw it on your own if you have, if your charting is open, if your brokerage account's open, you can look at your own. So here is, and this works actually great. So with Fibonacci, like I said, Fibonacci is a little bit more midterm, long term. You can do it intraday. I'd rather do the extensions intraday. It's a little bit more sound. Fibonacci retracements, you can do it. You can do it swing trading, and you can do it weekly. It's more for midterm trading as well. So this works out perfectly because we're on a 10-day chart, right? 10-day, 1 hour chart. So this is where a stock, these levels, basically, it's not written in stone that the stock has to go back down to these levels, but it's a very eerie how the stock actually does touch these particular levels. So I'm not going to get into the whole Fibonacci thing because it's inside the course. Actually, it's on version 3.0. That's basically, these are like gravity points, price action that's formulaic, mapped out for you already. You don't have to do anything. So if you don't like the price action tool, then use Fibonacci because it's already done for you. My mentor has shown me how to use Fibonacci the real way, and that's why you see extra numbers here, but that's neither here nor there. It's inside of the course. Don't worry about it. I go through it inside the course, version 3.0. Basically, you see right here, support. This is the 38.2. This is like one of the golden ratios, golden means. Stock always has to revert back to this level. At some particular point in the stock cycle, it's got to revert back to it's called a mean reversion. Reversion. So at some point in the stock's cycle, whether weekly, monthly, yearly, whatever, intraday as well, at some particular point, it's going to revert back to these gravity points. And these are levels, right? It's going to hit them, or it should hit them. 68% of the time, it should hit them. So you see right here, 38.2 support, almost touched it, bounced, hit it, went through it, ripped, right? So you look at these levels right here, and don't worry about the color coding. This is my own specific how I set it up for myself. It's inside the course. If you just open up normal Fibonacci, you're going to see something completely different. Don't worry about that. I go over it inside the course. So you look at this now and you say to yourself, okay, well, NVIDIA is clearly in a bullish trend because it's tapped these levels. It's hit these levels. It's hit the 38.8. Now it's gone through it. What else does it hit? It's hit the 61.8. Yep, right there. Right there. Support, resistance, bounced through it, right there, gone through it. Where's the next level? 76.4. Where is it? Yeah, hit it, resistance, support. So this was resistance, right? Then it became support. Then it was resistance. Then it came support, broke through it. Where's the next level? 88. Yep. Where's the next level? 127. Going to tag it, right? Or it's supposed to tag it because that's the next Fibonacci level, right? So now I look at this. Where's the next level after that? 178.15, right? Where's the next level after that? 193.65. I'm not worrying about those levels right now. These are the next two levels that I'm worried about. What do we see here? Consolidation. What do we see here? Staircase up, right? If you want to use the rectangle tool, map out the volatility, right? There's the reversal right here. Boom. Here's consolidation right here, right? Then it legged up. NVIDIA is on a bull trend right now, right? What's this? Consolidation. Where are we right now? NVIDIA's taking a breather. The stock is taking a breather. Now it's trying to figure out, is it going to go on a leg up or it's going to go on a leg down? Where is it going to go? Well, logically, here's where your risk management comes into play. So if you were looking at this now, and this is the keys to risk management, you have to say to yourself, okay, if I want to get bearish or bullish, I have to look at where's my risk mitigation. Well, in Fibonacci, all right, where's the stock going to go? By all rights, where's it going to go? First of all, at the extreme, it's going to bounce down to it's going to come back down and tag 166.71, roughly around that area. So if you were to get bearish, that's when you should be looking at yourself and saying, okay, I want to be placing a trade around 166.71. Now, if I'm wrong, what's the downside of my risk? Well, where is it at right now? It's 171.05. So 166.71. So where's your risk? Well, you risk losing, what is that? $5, right? $6, $5. That's your risk to the downside. If you're looking at getting bullish, well, where is it now? 171.19 up to 172. So what's your risk? Your risk reward may or may not pay off, because now if you're wrong and you want to go bullish, right? You're risking your risk could be $6 to the downside to make $2. Is that a good risk play? No, it's terrible, right? But we don't know what's going to happen because the market's super volatile. All we do know is at some point it's got to tag this, or it's going to come back and tag this. Right now, it's legged up, right? And right now, it's in consolidation. The trend is bullish, right? But we're in a bear market. So this is where a lot of traders get trapped. This is called a bear trap, right? Now, you guys have seen what we need to do. That's why I showed you money flow and I showed you volume flow, because money flow and volume flow don't lie. So if you add those with the moving averages, you're going to get a crystal clear, and mapping out with support and resistance using the box, you're going to be able to pinpoint what type of trades you're looking at trading. Personally, myself, depending on what happens on Monday, I'm just going to lay this out there for you. I've already got a position that I'm mapping out and looking at taking. It's because I've already done all this stuff, right? I'm kind of bullish on NVIDIA, right? So I'm looking at taking the 175, 180 vertical, right? That's kind of what I'm looking at playing. It's a saved order. I haven't put it in yet. I'll probably look at what's going on with the futures on Monday night, and pre-market Monday morning, I'll be looking at what's going on with NVIDIA. Then I'll be making my call, right? So that's kind of where I'm leaning right now, because I'm looking at the quant. I don't feel anything. I don't feel for this market. When you start to get your feelings put into it, you're going to get toasted. I look at the analytics. I look at the quant. I look at what the numbers are telling me. I look at what this is telling me. I'm an option guy, right? I'm an option geek. That's how I've trained myself. This is what I'm looking at. That's what I'm looking at, right? I'm looking at the number of calls. I'm looking at the sizzle index, right? This is what I'm looking at right here. Who's doing what? Where are they doing it? Where are the deltas, right? That's what I'm looking at, right? Then I come down here. This is why I picked out the position that I picked out, right? Who's doing what? Who's just did big trades? Who's doing small trades, right? This is what I'm looking at. I'm looking at the price and the time. Well, when they took this big position, what happened to them? Did they get blown out, right? Someone doesn't come in here and buy 1,000, 2,000 or 1,500 calls at this price point if they don't think something's going on, or up or down or whatever, right? They sold. What is this here? This is a put. What do they do? They buy this. Actually, I'm not going to get into that right now because that's neither here nor there. This coaching session is on support and resistance. So that's how you map out support and resistance using Fibonacci retracements. At some particular point in time, it's got a tag. Could it stay in consolidation? Could, possibly, yeah. I mean, it could stay in consolidation for Monday. It could just bounce down in that range. I won't know until Monday morning pre-market. I'm going to look at the volume. I'm going to look at the volume of what's going on in the pre-market. Then I'm going to map out again, like I've shown you guys. I'm going to map out Friday, the high and the low and the close, right? And then Monday opens up in pre-market. I'm going to look at everything, make the final determination, right? But Nvidia right now is in a bullish uptrend, so that's why I picked the position that I did. Will I buy calls? I'll probably buy calls. I'm not sure yet. I'm going to wait and see. So that's how you map it out using Fibonacci Fibonacci retracements, right? You go from the high, you go from one of the lows to one of the highs, right? Now, if you want, Fibonacci retracements work both ways. You can go from the low to the high, and you can go from the high to the low. Same thing, it doesn't matter, right? Depends on whether you're bearish or you're bullish, right? When you're drawing out. So if we were bearish, let's see here. If we were bearish, so I'm going to have to go down to a 9-month one-day chart. So if I'm bearish, I'm going to have to do this because this makes a little bit more sense. And this is actually what you should be doing because then you can break it down intraday better. So I could take it from this high and go all the way down to the low, all right? So, or I could take it from this high. It doesn't really matter, all right? But I'm going to do right from here to this low. So if you're bearish on NVIDIA, now you have to say to yourself, well, where's the low? Right there. What happens here? This is a reversal. This is an inverted hammer. So what happens here now is you get that selling day, and then you get an uptick. But this is consolidation. Don't fool yourself. When you're looking at it from this perspective, let me make it a little bit bigger. And then after this, we're going to close down the coaching call. I'll take some questions. Don't fool yourself. This is consolidation. Because now we're looking on a longer time frame, and you get to see the bigger picture of what's really going on with NVIDIA. So where does NVIDIA got to go through? What's going on with NVIDIA? Well, it's got to retrace back up to 23.6 at some time. right? You see it right here. That was support, broke through it. Now that was resistance and it dropped. This was the 0 point, which means that was the start of the cycle, right? So what happened? It hit it once, basically almost twice, 3 times, 4, 5, 6, broke through, right? This is consolidation. This is what you need to look at in the long term. So if you're bearish on NVIDIA, well, where's NVIDIA got to go? This is why I have the extra mapped out, what my mentor taught me. You're not going to find this on normal Fibonacci. You got to add it, these next 3 levels down. So this kind of tells you if you're bearish, where you got to go. 105. Could NVIDIA hit 105? Well, if you go back here, if you go back to a 2-year, lo and behold, look over here. Did it hit 105.82? Absolutely. Resistance and support popped right through it. How long? Look. You have to look at the complete life cycle of a stock. To get real guidance, look at where NVIDIA ran, 36 bucks. All right. Where's 105? Right here. Never did they think it would hit 105, 105.80 through, and it broke through it. Let's look at the volatility on it. Let's look at the volatility on it. How long did it trade there? Well, let's look. From the 7th to the 8th. So what was that? So for almost a month, it traded around that 105 level with the volatility, bounced back and forward. Was that a time to take a trade? That was resistance, right? NVIDIA hit a high there and it bounced around for a whole entire month. Shows you right there, shows you the volatility, shows you the timeline, shows you the price action, right? Would that have been a good time to take a trade? No, because you would have got chopped up like chop suey, right? And then look what it did, right? Let me open up my candles a little bit more for you. This stupid platform. So look, congestion, right? There was resistance for over a month. Then it broke out. That's consolidation, right? But look at this. What is NVIDIA doing? NVIDIA is taking a leg up. Extreme breakout. Then it busts back down into this again. What is this? This is almost over a month, right? Resistance. Chopped around, back and forth, right? But you see what it's doing, right? So this is how you use the rectangle tool to do price action, volatility, and time compression. So you can see clearly what NVIDIA is doing. So if you are bearish on NVIDIA, right? And you open up the chart and we're in a bear market, what does that tell you? Right? Look, where's the next level down? 105.82. Now, are you going to wait Are you going to wait till it goes down to 105.82? No, you don't do that. But then you say to yourself, okay, let me map this out. Where could I possibly, if this NVIDIA started going down here to 155, right? Which it did this week, it was 153 or whatever it was, right? Where could I go? Where's the next logical price point? Well, no problem, right? To do your trades, you go back over here, right? Can NVIDIA move 20 bucks? NVIDIA can move 20 bucks in a day, right? So start mapping it out. Sorry, let me get the right tool out here. Let me open this up so you guys can see it. Sorry. It's a problem when I'm on a wide screen here. Let me move this over here. Perfect. Where is there a lot of congestion? Right here. Right. There's your next level. If you're bearish on NVIDIA. $155, or sorry, 153, 134. Quite possibly over the next month of trading. Because look what happens when you map it out with volatility. How long did it trade in that area? So if we were to look at doing option trades, it's almost 2 months in that particular area. So that's how you map out, and that's how you use support and resistance using the price action tool, using volatility box or the rectangle tool, using Fibonacci, look for cluster points, look for support and resistance, look at time frame, look at the candles, you bring it all into play. You can shrink it all down to intraday trading, which is what I've shown you. So what do I think is going to happen with NVIDIA? Well, if I'm going back and looking at it from the biggest picture, a 3-year 1-day, I could say right now, okay, now it's in consolidation mode, and right, and we're in a bear market. So that's clearly what it says right now. On the long term, on the short term, there's a spike. You clearly saw it, and we looked at it. Right now, NVIDIA is sitting there in consolidation mode. We're at the price point of 171. It's going to have to make up his mind, right? What's it going to do? It's going to go. It could stay and trade in consolidation for another day or two, or it could decide to say next week it could bust out and move higher. We've mapped everything out as far as where it's going to go higher, and we've mapped it out if it's going to go lower, if it's going to bust out of consolidation and break down from consolidation. We know exactly where it's going to go. I don't know. I can't predict the future. What I can do is map it all out. So now I know what my risk is, and you know what your risk reward is for taking any type of position, whether it be bullish, bearish, or just doing a risk-defined trade and just getting a vertical or a spread and just calling it a day. And just, you know, NVIDIA may bounce around for another week or 2 weeks and kind of just say, okay, well, I'm just going to be risk-defined. I'm just going to do a risk-defined trade. Totally your call what you want to do, right? So, and you can do this with any equity, any future, any option, any stock, any ETF, doesn't matter. So it's the exact same principle, right? The only thing that you have to be concerned with is lack of volatility, lack of volume, and securities that don't move a whole bunch, right? So then you have to say to yourself, oh, okay, I'm going to be conservative, I'm going to be aggressive. Do I sit and wait, et cetera, et cetera, et cetera? That's on you to figure out how you want to trade, right? So that's it for me. We're gonna do the extensions, but we're almost like 2 hours into this, and I gotta go. I gotta get my kids going for the day. I spend some time with them. So the extensions is super simple. I'll probably do it on next week's coaching call. I'll go over the extensions, but you got a lot of meat here to work with, and a lot of stuff that should have opened your eyes to how you really want to set up and position your trades. So I'll take a question or two, and then I'm going to shut down the coaching call. So if you got a question, go ahead. Okay. So what I'm gonna do is I'm gonna say thank you guys for showing up. A lot of members will watch this on the replay when they get into the site. So for those of you that took the time to show up live, great. Thank you very much. And then we'll see you tomorrow in the next training session. Take care, everybody.